Thanks for tuning in again to another NetPicks video. Glad to have you here. Hope you subscribe to the channel here. And before we get started, I just want to talk about this top 10 options income superstars PDF. That's an options guide that our resident guru Mike had put together. It's free. You can download it. You're going to learn a simple strategy and pretty much 10 of the best stocks to trade with options. All right, so the link is above or below. Click it, download it, and learn more about some options. So speaking of options, that's what we're going to talk about today. And essentially, this pandemic has really changed the markets for active traders and investors. We've all seen it. Markets that were never on the radar for many traders, well, now they are. If we look back 12 months ago, who was really tracking the price of lumber futures, right? But the historic moves that we've seen in some of these kind of markets, it really makes it hard to ignore those opportunities for active traders especially. So what's happened? We got trillions of dollars of stimulus money was being thrown at the markets over the last year. And what we've seen is markets that are historically been pretty quiet just come to life. And one of those areas is in commodities. All commodities have been on historic moves higher in recent months. And that makes them more attractive as a trading and investment vehicle, right? We look at lumber futures, for example, that's more than doubled since the first of the year. Copper futures are up over 30% since the first of the year. Now, let's be honest, commodity futures, they're not the most liquid products for traders to trade directly, but there are ways that we can take advantage of these moves that are going higher. So how would you profit without trading futures? Because look, futures, they're not for everyone. They can be riskier products to trade for virtually any trader. When you look at the commodity futures, they don't have the best liquidity. So that makes it a little bit harder to get in and out at good prices. If you think about it, last week, the active copper futures contract only had 119,000 contracts traded on the Friday. That same Friday, only a few hundred lumber futures contracts, not a lot, right? So it's going to make it pretty tricky to trade. But there are ways that we can get exposure to these commodity moves. And one way we can get exposure indirectly to the movement is through the home builder stocks. Okay, now those have actually made it to our current watch list when it comes to options. So with the rise of commodities like copper and lumber, we're going to see an impact on the home builders going forward, right? The starting prices of new home builds, they have risen to $30,000 to $60,000 in some areas just due to the increase in material costs. Now that is a huge spike. And so far it has not impacted the price of the home building stocks. However, we're reaching some pretty extreme levels and it's going to really be hard to ignore those going forward. Also think about interest rates, right? Home builders have benefited from these rates being at historic lows, plus the massive amount of stimulus money being thrown at the market. So this low interest rate has caused a big supply issue in the real estate market, right? There's too many buyers chasing a limited supply of available homes. Now, some buyers are already offering well over asking price on homes that they're not even really going to take a look at. So that's made building a new home more attractive because it's cheaper to build a new one than to buy a used one in a lot of cities, right? So these low rates and the huge stimulus, what's happened is it's helped offset the rise in material costs. As home buyers, they're not even blinking at the rising costs. However, as markets get more stretched and home prices continue to go higher, we're going to get to the point where higher costs just begin to price buyers right out of the market. Now, I'll be honest, we don't really expect the home building stocks to become mainstays on our watch list of things that we're going to trade. Okay, but in the near term, while these markets are really, really active, we want to have exposure. And we've actually identified 5 markets that we think are pretty good candidates to track in the months to come. Okay, so we took a look at the markets that have had the most consistent stock movement with good liquidity in the options markets. Okay, so when we talk about liquidity, what we're looking for is good volume, good open interest numbers that are spread across many different strike prices. So our top 5 list includes one ETF and 4 individual home building stocks. We have the S&P Home Builders ETF, Toll Brothers, Pult Group, Beazer Homes, DR Horton. Okay, you don't need to trade all of these at the same time because they're pretty correlated. But we do recommend take a look at 2 or 3 of them. Okay, we're currently in trades on XHB and PHM, right? The S&P Home Builders ETF and the Pult Group. And that gives us good exposure to the sector without taking on too much risk. So when we look at these, you're going to see stocks have weekly and monthly options that are available. BZH, however, that does not. However, we do recommend sticking with the monthly options as the weekly cycles, they don't have a whole lot of action in them. The volume and the open interest, it's not too good. So it's going to make it more difficult to get in and get out of trades quickly and at good prices. There are 2 option strategies that are most attractive to us to use on these 5 markets. Trading simple long calls and long puts, as well as selling credit spreads. Okay, the stocks have been in some really good trends in the last number of months, right? So long calls and short put spreads have been great trades to consider. Now going forward, with these markets so overbought at these current levels, we're going to start looking for pullbacks to take advantage of. To do that, we're going to be looking to sell out of the money call spreads, buying long puts once price does confirm that it's ready to go lower. So when we're buying the long calls and puts, we're going to be looking at the monthly options with 20 to 60 days left to expiration. Okay, we're also going to look to buy the option that is 1 or 2 strikes in or out of the money. Right? So we want to make sure we're trading the strike price in this range that has the highest open interest number. When we sell credit spreads, we're also going to go to the options with 20 to 60 days left to expiration and sell a spread where we can collect 30 to 40% of the width of the strikes. For example, if we're looking at selling the 80-85 call spread on XHB, we want to make sure we can collect between $1.50 and $2 when opening the trade. Now look, markets, they're going to cycle over time. Okay, that means new markets or new areas of the markets are going to become attractive trading candidates. So being open to trading markets that we've never considered before, that's going to be necessary as part of your trading in 2021. Right? Like a few months ago, lumber and copper prices, we weren't even thinking about those. However, for the time being, they're actually presenting an opportunity to diversify into markets that can provide good trading conditions. So trading the home builders, it actually gives you a way to participate not only for the lumber and copper prices that are going higher, but also from the extreme real estate market conditions that we're seeing due to low interest rates and the massive stimulus money that's in the system. So are we going to plan on trading these stocks long term? No, we don't think that, but it's going to depend on the conditions of the market. We actually believe they're going to be pretty good markets to trade for the next 6 months at least. So consider adding to your watch list. Now, if all this sounded confusing, I'll give you Mike's email. You could drop him an email directly, and you want to talk about options, how you can start getting involved in options. That's the guy you want to speak to. All right, thanks for listening. Again, any questions, you can put them in the comments below or hit up Mike directly. I'll talk to you soon. Thanks.